Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a brief overlook at the stock market as well as the Magnificent Seven stocks and some various indicators. Now, most of you who are subscribed to my channel seem to be more engaging into the crypto side of things, but what the stock market is doing and what the top stocks are doing does affect the crypto market as well. So always good to have an eye on the macro market perspective, if you will. So let's start off with fear and greed, and CNN falling down into neutral from greed. So we'll take a look at the charts and see if we can get an idea of what's going on there, as well as pie vesting going down from extreme greed into neutral as well. Of course, I cannot talk about the stock market without reminding you that typically there is seasonality in election years late into the month of October. So right here, there tends to be increased volatility, somewhat of a pullback typically. We'll see if that happens this year. But overall, the big thing is usually post-election, the markets tend to be positive unless there is a recession, like in 2000 with the dot-com bubble crashing when Bush was elected, or in 08 when Obama was elected. They're already in the midst of the GFC. Of course, the Fed is going to make a decision about rate cuts coming soon, and in September they cut by 50 basis points. Now, a lot of people were freaked out by that number because in the past, when the Fed cuts large and fast, that typically means something's very broken in the economy and they're a little late to trying to quote unquote fix it. But I'm not taking a look at it as a hard and fast cut yet, unless they cut another 50 points. Then the alarm bells will start sounding off in my head. But they didn't have an emergency meeting or cut at all in October. So for what it's worth, I take a look at it as two 25 base point cuts. And as you can see, in 1998, 2019, when we have low and slow cuts, that tends to be good, at least for the near term, for the next year or so. And that kind of falls in line with two rate cut paths, one being recessionary sooner than later, and the other one still being bullish until a recession is to come up. And of course, as you guys know, the S&P is already in all-time high territory. We're already past this 50-day mark where we typically see divergence. Again, this is an average. Things can always be different. And we also had that 10% drawdown when there was the yen carry trade unwind in August before the rate cuts. So the dark green overall right now very similarly matches what we've seen in the past. When rate cuts tend to be low and slow, they pause and markets will have somewhat of a blow off top. So I'm taking a look at this bull run as end of a secular bull run type of cycle, if you will. That's been my thesis so far. As far as crypto fear and greed, what's interesting is we are making a new higher high in greed. So crypto, we were making higher lows in the lower fear section, but now we've made a higher high because Bitcoin, at least in the US dollar, didn't quite make an all-time high. Other currencies it did, but it almost did. So if Bitcoin is able to make and stay at all-time high region territory in the past, we only have one data point to really show, and that's right here. In December 2020, Bitcoin was breaking the all-time high from 2017, and it stayed breaking it. It kept going up. And as you can see, even though it kept going up, extreme greed went down to just greed, and the very top alt season was here. So what I'd like to see is typically when there's not spikes, but rather accumulation, if you will, that tends to be really good for Bitcoin in the upcoming term. So we'll see. I still think there may be some time for crypto though, and stay subscribed if you want to learn about any of Bitcoin mining stocks, Coinbase altcoins, or we talk about Bitcoin seasonality with the rainbow chart. So subscribe for more of that content. As far as the S&P 500, what do we got here on the weekly? Well, I wanted to throw on the RSI because, as you guys can see, we have higher prices and lower strength in the RSI. There's no denying that it's bearish divergence. However, can take a while for these things to play out. That yen carry trade unwind basically is people taking advantage of the difference between currencies and borrowing rates with the Japanese yen and the US dollar. Not going to get more into the weeds on that here, but that was when the RSI got down to 50, and then it just had a bounce. At least here with the S&P 500. If we go over to the daily, what do we see here? So the daily, let's throw on, I think I'm hiding them. Yep. Let's throw on our moving averages. The daily, I mean, overall, we're still pretty bullish. People can see this candle, and I have on the Heikin-Ashi calendars. They freak out however much they want, but we're still above the 50-day moving average. So I don't start to worry or get concerned until we're at the 200-day moving average or the 50-week moving average. Usually, often, there's bounces off there. Okay, the 100 and the 50 were close, so that's fine. And if you tend to buy off the 50-week moving average on stocks, I mean, that's not a bad take profit area. Of course, I like to throw in the RSI, look at the stochastic RSI. In my videos, I always want to try to answer the essential question, is now a good time to buy? A lot of times people get into predictions or they overanalyze the market, get too much in the weeds. I just want to answer the question, is now a better value time to buy? And right now you can see we're a little bit extended and we're seeing some weakening strength. So just be careful. In the short term, I wouldn't classify this as a good long-term time to buy because how much the stock market is looking extended. But of course, that's just the market overall. Individual stocks, you can see something different. The volatility index, this is the VIX. When there's volatility spikes, those tend to be lows in the market. And something interesting is the recent VIX with that yen carry trade unwind was the third largest outside of COVID and the great financial crisis. But you do see here strength rising in the VIX as well as the VIX just getting higher overall. So volatility is coming into the markets. I'm surprised there's not more volatility, especially with this type of election. And again, I think it maybe goes to show that whoever's president, as far as the market's reaction to it, really doesn't matter. You can go back in time, whether it's Democrat, Republican. Markets tend to do well Q4 after whoever's elected. So, and into Q1, the most bullish time of the year, the most green time of the year is October through March. So just keep that in mind on average. So right now, volatility is rising. As far as, this is one indicator I've been adding on recently, and that's the percent of stocks above the 200-day average. It's important to take a look at because overall, when this peaks around 70, you can see there's a little bit of a drawback. Now we have the moving averages there. This was, of course, when there's a lot of QE in the market, had all that extra money to play with before inflation really became an issue. So we got all the way up to 90, my God, but we did have a recent spike above 70 and a little bit of a pullback. So if the markets do pull back and the percent goes down from 50 to 40, that wouldn't surprise or shock me just because how heightened it's been. It does look like it's getting some weakness overall. But again, maybe we'll see this pop off sometime in the future next year. And let's remove the RSI just for a moment. We got to take this off log. Something to always keep in the back of your mind is that when the yield curve inverts, what this means is when the Fed raises rates, most simplified way I could put it, when the Fed raises rates, then inverts the yields of the 10-year, the 2-year. You could look at the monthly, the different bonds, if you will. But when it uninverts, what typically happens is there's a bottoming in the market. On average, about 1 to 2 years later, this is the dot-com bubble and the great financial crisis. So we may still be 2 years out from a bottom. This, on average, would put it sometime in 2026. So there's an expression that the markets can remain irrational longer than you can remain solvent. So just know, if you're hearing this bearish news, you need to have patience. You need to have a strategy, a plan, if you will, because the market isn't always going to do what you want or what you hope it's going to do. It's going to do some things differently than you expect before. So do have a strategy. So here in market psychology, I always try to talk about emotions being indicators and how we look for opportunities when there's fear. So when you have a strategy, when you have a plan, when you pay attention, spend that time checking your stocks or the charts on your stocks or cryptos, whatever, every week, then you can find those opportunities. When you have a plan, you're removing emotion from getting in the way of your plan, whether it's buying the rips, FOMOing in, not selling the tops, or not buying the bottoms because you're too fearful. The news is too bad. So you need to make a plan, literally write it out, and strictly stick to that plan. Okay, of course, try to sort of sandbox it, if you will, test it out before you use your hard money. Don't invest more than you can afford to lose. And what I do, I set a budget. So even when I make mistakes, and I'm not perfect either. There's some stocks where maybe I didn't research them enough, and I've made some bad investment decisions before. But those are always expensive lessons to learn. But overall, as long as you write things down and understand why you make mistakes, it's a good way to learn from them. So please make a plan when it comes to investing or even getting into crypto, because how volatile that is. Unemployment. We have unemployment data coming out tomorrow, I believe. And so, it's always interesting when you see the moving averages and you get a bounce off it, just like a stock when people are taking profits. It's just interesting. And it happens with things like unemployment and all that. Anyways, here's my theory, guys, is that if unemployment it stays below this high that it made, 4.3%, then I think markets are going to continue to rip. And I don't think the Fed is going to, I don't think it's going to behoove them to continue to cut and not consider pausing sooner than later. Because ask yourself this, if inflation, let's type in inflation, here we go. If inflation's going down, if unemployment is staying flat or going down, why cut? Now I get that the interest is the third largest item on the government's balance sheet right now, and they owe that much interest because they've raised rates. When they raise rates, the government debt, it becomes that much more interest they owe back. So right now the Fed has this magic number of 2% where things are just right. But if unemployment goes down, if it stays flat, if inflation stays around here, I think the PCE reports, whatever, coming out, if all that is fairly positive, then I'd expect the markets to do well sooner than later. However, if the unemployment goes up, then don't be surprised if things do turn negative. Or and I think policies there's a lag effect on the rate cuts. And so even though the Fed cut rates by 50 basis points and they might cut by 25 again for another month or two, there typically tends to be about a year's worth of lag on those decisions. That's why it's really hard for the Fed to adjust that basis point thermostat just perfectly without messing something up. Well, and if you want to really get into it with these elections, both parties, all politicians, they spend way more than our tax dollars give them, and they don't spend it well. I don't care which side of the aisle you're on. So with that being said, the debt's growing, and that's going to create issues sooner than later. So if the data is negative, maybe expect one of those pullbacks to that 50-week moving average on the S&P like I talked about earlier. If it's negative, maybe even another pullback in crypto. But my thesis is I do suspect that when the Fed does pause, that is going to start leaning into the end of the secular bull run top. That's my theory. We'll see if it plays out. But with the way things are going, it does seem like inflation could come back to be a problem in the medium term future. We'll see. All right, let's start flying through the stock analysis, and let's put it on log so it makes sense. I'm also going to, let's throw on the RSI again, because I think the RSI, when we've been having strong moves for a while, you want to take a look at the RSI because it'll be showing us something. So more highs, and again, lower strength, bearish divergence, okay? Again, things can be bearishly diverged for a while. It doesn't mean that you should be selling everything right away, but it does indicate that a decent pullback will be coming in the future sometime. You just don't know when. Again, things can remain irrational. So value for NVIDIA, look, I wouldn't be touching this right now. I think it's a great stock. But consider this. It's a $3.3 trillion market cap stock. So the way I look at it is this. One is that, is it within the range of its yearly low? No. Are we seeing a flip positively on the stochastic RSI or good fib levels, good moving averages? No. So I feel like I would be reaching if I were to buy here. Even as a long-term investor, it might take a while, especially since I believe we are near the ends of a secular bull run. And so the way I look at this is that, you know, if you were to invest $10,000 into NVIDIA right now and you want to make $20,000 or double your money, then you expect this market cap to double. Now with inflation, that becomes organically easier over time, but I don't see that happening anytime soon. Who knows, maybe famous last words, maybe next year is that secular bull run, blow off top, and some of these stocks randomly get up to $5 trillion. I don't know. I'm just saying it's a very risky time, and these aren't the type of plays I would be reaching for. Again, I think it's a great stock, one of the best, but I do think it's a risky time in the cycle to be investing. Microsoft, look at that candle. My God. Let's measure out this move. Came right back down to the 200-day, so the 50-week must not be that far off. If we go over to the 5-year, you can see this doji. So doji means undecided. And, you know, I've been reading, there's been articles that pop up on my Google, just like different stock market articles, and I've been seeing some Microsoft FUD. And it's always interesting how the FUD, the bad news, comes out when the stocks are doing bad. And again, that could be, if you love Microsoft, I don't hate dollar cost averaging here. I really don't. So again, you could be looking at the moving average. That's an area to dollar cost average. Which one is this? Sometimes I draw fibs backwards or upside down. So this is the 382. I drew from the bottom to the top. You have 400. So between 400 and 411, good discounted areas, even if lower. Then again, you can take a look at the MACD flipping positive. That's the moving average, convergence, divergence. Right here, that's another indicator. So the stochastic RSI flipping positive. Those are good indicators to look for. Let me just show you that real quick. So stochastic RSI, and I won't do these for all of them. So right now, daily going down. Let's see what it's doing on the weekly. So it's flipping positive and it's in the shaded area. So I don't hate that right there. I really don't. And then as far as the MACD, and again, you're not going to get all the indicators line up, but this goes back to what I said. Have a plan. Have a plan so you know what to do. MACD, maybe it's getting ready to flip green. Okay? If it's getting ready to flip green, this might be a good area to buy for Microsoft. So just something to keep in mind. To keep things simple, I'll just put on buy sell signal here. Okay, even though I think the RSI would be more telling. Apple extended near the 1618 fib. As long as, let me check, make sure this is off log scale, because that's going to move. It's above the 1618 fib. Okay, so I drew a fib from the recent high to the recent low, and it's getting above that 1618. So the next area, the 2618 for Apple, 280. Can you imagine 280 getting up that much on a $3.5 trillion stock? So we're talking about some of these top stocks getting to that 4 trillion mark, and 4 trillion being that next magic big number. So it seems unbelievable now, guys. I remember when 1 trillion market cap was an unbelievable number. So 4 trillion is the next area to be hit, and you know it's going to be one of these three stocks, Apple, Microsoft, and NVIDIA, to hit it. As far as Amazon, getting back to that all-time high line again that it's been in love with ever since 2021. So really want to see this break above and get to that 1618 number. We'll see. We'll see. This thing has teased us so many times at that number. But again, these are extending, guys. I wouldn't be buying any of these right now. The only one I'd be looking at dollar cost averaging is Microsoft. Google. We talked about Google because recently we were saying, maybe this is a good value because when it's gone down to the moving average. And again, you look from the moving average that a stock or crypto loves. Which one does it honor the most? And at deep value, it loves the 50. So we said, hey, maybe it's going to have a nice big move off the 50, and boy, did it. So if we go to the daily, Man, you can see that move right here. And look at that. This is why we draw fibs to this gray line, former all-time high line. Hit a good bounce there. Had a good bounce off the 50-week moving average. And so, yeah, fibs moving average showed us a good time to buy. Meta, how's Meta doing? And Meta, sell signal on the daily. Okay, so may see some little macro, or micro, pullbacks. And you'd look for a bounce, hopefully 568, 561, where these moving averages are. So Meta, overall, if it does get lower, you can see it gets sometimes down to the 100-day moving average, even a little below it. So maybe the deeper value for Meta. Would I invest long-term over here? No. Personally, I think Meta's extended as well. But again, it's important to watch these Mag 7 stocks, because when these things start rolling over and correcting 20, 30%, then you know the whole market's going to have a hard time. Lastly, let's finish off with Tesla, the bastard stepchild of the Mag 7 stocks. I don't know why it's in the Mag 7. Really, I don't consider it to be. But we talked about how, let's zoom out here. We talked about this big, strong move they had because they had this descending trend line. Okay, it was forming this giant wedge. These bounces were off the 100-month moving average. And when it was coming up, we were saying, okay, is this a fake out? And then it got above again. And when it came down, I drew this channel, and I said, you know what? Tesla's in this channel. And what also happened is it got near these moving averages and the upper end of this descending trend line, and man, did it have a strong move up. So on the weekly, it had a big buy signal, still moving up, and now yearly all-time high. So Tesla, when Tesla starts ripping, and guys, I encourage you to look at the daily trading volume charts. I need to put them on this channel someday. You'll see stocks like Tesla, Nvidia in the top 5 like every day. And so the extra trading volume really pumps these stocks up, and especially Tesla, way more than it deserves. So just bear that in mind, that if Tesla starts to be very bullish, that's another signal, in my opinion, that we are getting into the end of the bull run cycle, mania, hysteria phase, euphoric phase, if you will. So that's how I take a look at Tesla. I'm not investing long term in it now, but if any of you caught the 100-month moving averages, hard to argue that because how deep value this is. But should there be a big recession, this would be a stock I'd look for having the worst punishment out of the Mag 7. So anyways, guys, let me know what you think in the comments below. What do you think about the stock market action and what the unemployment and Fed numbers are going to be? Because that's going to have a big effect on our stocks, our crypto, everything in the near and long term. So thanks for watching. Have a great day.